So the oil market news, and it's coming out fast and furious the last 4 days, is definitely going to give investors whiplash. I know it's confusing the high frequency trading algorithms. The high frequency trading algorithms, if you're not aware what they are capable of doing, they can scan Twitter, they can read Twitter, they can read news headlines, they can interpret the news headlines faster than any human being is capable of doing. And so all these conflicting headlines, conflicting stories, conflicting evidence, it may eventually break one of these high frequency trading algorithm programs, and we may have some type of flash crash either up or down. Some type of gap up, some type of gap down. Maybe they'll cancel the trades. So if you're not familiar with what whiplash is, let me read the symptoms, since we're going to keep this kind of funny here and with the news stories and what it's doing to investors. So whiplash is a common neck injury. Symptoms include fatigue, dizziness, jaw pain, headache, neck pain, and back pain. It is a neck injury due to forceful, rapid, back and forth movement of the neck, like the cracking of a whip. Whiplash most often occurs during a rear-end auto accident, but the injury can also result from a sports accident, physical abuse, or other trauma. Let me also add high-frequency trading algorithms that are moving up the oil price. On one day, they're moving it up over 10%, and on the next day, they're moving it down 6%. So if you traded, not financial advice, just my opinion, if you set up volatility trades, then maybe you made some money. If you were either direction and all the news stories came out against you, sorry, but this is how crazy the new markets are, especially the oil market. So the good news for lower oil prices, if you want lower oil prices, if you're not long oil, is that there was a WTI extended the losses today after a surprise crude inventory build. Oil prices traded down today on the back of confidence that Saudi comments about the pace of recovery from the attack on its largest refinery. So during the past 2 days, the Saudis managed to contain the damage by recovering more than half of the production that they had lost during the terrorist attack. Energy Minister Prince Abdulaziz bin Salman said at a briefing in Jeddah. Thus, the company will be able to meet all of its commitments to customers this month by drawing on its crude oil reserves. So Saudi, I forgot to mention this on a previous podcast that I've been covering on this for the last few days now, is that Saudi said they had 30 to, I think, 45 days of stored oil. So they did have some, but there were stories today coming out on oilprice.com that PetroChina, which is the Chinese oil company, remember I said that this was going to affect China, that PetroChina was not going to get their oil deliveries. So they were very, very worried. But the oil price has definitely whipsawed in just the last couple days. It's been crazy volatility, and this is what you have when you have futures contracts, lots of open interest, and also high frequency trading algorithms. And the algorithms are scanning things faster than human beings, and they're seeing the headlines that are coming out that, well, now instead of months, because remember, there were interviews yesterday, there was lots of content out yesterday, and I was reading some of the articles, and I put the links to the articles from experts, including Robert Rapier and other oil journalists. All they do is cover oil, all they do is work their contacts of oil networks, and they were saying that this would take months. And then today, the news stories are now that, oh, they're going to have these things fixed. The front story now on oilprice.com is that the Saudi oil outage impact is not as bad as predicted. So instead of several months, it could be only another couple weeks. So that's good for lower oil prices. They're also, before the bad news for higher oil prices, good news for lower oil prices, if you want to look at that way, was that people were thinking that Brazil might actually benefit. So there's an article that came out today that the biggest winner in the Saudi oil supply crisis is Brazil. I don't know if that's going to end up being the case, because there's a lot of problems with Brazil's oil industry still. Yeah, so only yesterday there was good coverage out with expert analysis and interviews with credible sources that the outages could last months. There was the satellite images, and then today they've already got things back on track. So the shale oil stocks. Let me take a look at some of the shale oil stocks now. Some of the oil service companies, Diamond Offshore Drilling is down 7.46% today. Halliburton's down 6.49%. OIH, which is the VanEck Vectors Oil Services ETF that has like a basket of Schlumberger, Halliburton, those types of companies, that's down a little over 5%. Transocean is down a lot, down over 7%, almost 8% at 7.53%. So there's been a big snap. Seadrill is down 6.21% today. So there's been a snapback here. Schlumberger did not go down as much today. Interesting. So the crude inventory builds, that is an important number. If you're not familiar with the oil market, that tends to affect price a lot too. So not only do you have the Saudi news, which seems to be good for lower oil prices now that the Saudis are saying the estimates to get all the oil production in the refineries back online at Abcake. Thank you for messaging me the correct pronunciation, Abcake. Got it right this time. That, along with the extra crude inventory builds, this just adds to my thesis that oil was in a continually worsening bear market prior to the Saudi news. Who gets Venezuelan oil? Venezuela is not really that big of an oil player. Their oil production has completely and totally collapsed, but Venezuela owes a lot of their oil from loans to delay bankruptcy to the Chinese and Russians and Iranians. I believe the Iranians are also down there helping the Venezuelan oil industry, but Venezuela is a complete and total mess. I was actually going to bring this up. So Venezuela, since Hugo Chavez became the main official in their country through election, they stopped investing any profits back into their oil industry, and he spent a lot of money on social programs, and he didn't prudently invest into their oil industry. And a lot of the best talent, the best oil industry people in Venezuela, they've left the country a long time ago. The U.S. imports some, but I've read estimates, Ricky, that Venezuela's oil production, it was at 4 million barrels per day. It was a sizable producer, and now Venezuela's oil production is down. I've heard it's below 1 million barrels per day, so it's completely and totally collapsed in less than a decade. And now it's down to, there's estimates, Ricky, that Venezuela's oil production is now down to only 500,000 barrels per day, and they can't even meet their obligations to the Chinese. And that's on top of the Chinese giving Venezuela emergency currency swaps. So Venezuela then would get RMB loans and currency swaps and then dump the RMB to get dollars or euros on the international markets, offshore currency markets. Venezuela has sold its gold, or the English banks won't give back its gold. They've leased it out, or they've sold it, and then the banks won't give it back. Venezuela is a mess, guys. It's a failed state. They used to produce 4 million barrels per day. They used to be a very good oil-producing country. They had a very bright future, and things have completely and totally collapsed in Venezuela. You cannot blame the U.S. It is a mess. It is way more than just the U.S. there. In fact, the Chinese are asset stripping. The Chinese are straight up asset stripping Venezuela. The terms that the Venezuelan government agreed to on the deals for the emergency loans on the currency swaps and the amount of oil that Venezuela had to give China for emergency loans is insane. Yeah, but a bunch of my listeners are still going to blame the U.S. for all the problems. Venezuelan government the Chinese came in and saw an opportunity and took advantage of the desperation of the Venezuelan government, and there has been gross mismanagement, corruption and theft, waste, fraud, corruption and abuse by the Venezuelan government, the Venezuelan military, and the bureaucrats and the other leaders in the country. Okay, you cannot blame the U.S., you cannot blame capitalism for Venezuela's oil production going down from 4 million barrels per day down to 500,000. It is a true tragedy, all the things that are happening in Venezuela. They should be producing 4 million barrels per day. Actually, if they had reinvested, they haven't reinvested into their refineries. They haven't done any prudent investments. All the most talented oil people in Venezuela have long left. From what I've heard, a lot of the most talented people in the Venezuelan oil industry left over a decade ago. They're in Colombia. They're in the United States. They've left. So there's been a big brain drain on the most talented workers, entrepreneurs in Venezuela. It's just truly tragic. But it appears that Russia and China are making investments into Iran and their oil industry. There's an article on that on Oil Price talking about that. Russia is down in Venezuela. They obviously don't need the oil. I think Russia sees that as like a military base and the ports. Oh, I'm glad you like the economic cartoon. Yeah, I couldn't find exactly one with the Saudis, but it's close enough. And the regular stock market does not, let me add, the regular stock market was not super happy with this volatility. The dollar index went down. Gold is up. Gold was up above 1,500. Silver was up above 18. The stock market didn't do very much. It was about flat, not up 1%, about flat. All the major stock markets. So we have the oil prices down about 6% today. Yesterday they were up enormously. And Sunday night they were up enormously, record amounts. And that's how quickly the news can change things. And especially with these high-frequency trading algorithms, because in the past it would take a lot longer for news to get priced in, and now it's sometimes within seconds now with these high-frequency trading algorithms that some things can do a complete and total 180. These high-frequency trading algorithms can scan the headlines of articles and read articles for keywords faster than human beings can read. They can speed read and scan. So if someone knows what they're doing, they can fool these algorithms with fake headlines. So they can issue a press release about a company, and the actual wording in the press release could be negative, but the headline is positive, and it could fool the high-frequency trading algorithms. So what's my guess? It could be the Iranians. It could be the Iranians. People don't think it was the Iranians, but it could be. They could have given the Houthis in Yemen, they could have given them the equipment. We know the U.S. stupidly under Obama that at least one drone, maybe more, because we saw pictures of it on Iranian state TV that our drones crashed in Iran, and they sold the technology off to other people. I'm sure they copied it for themselves. So they have the best drones with all the best military capabilities. They got all the schematics. So they could have easily done that. I don't think Houthi rebels could have had access to expensive technology with that. I think someone was probably funding them. Yeah, everyone always says Israel or CIA for everything, but it's not always them. Every government is always doing bad things. Now, obviously, the U.S. government and Israel have been involved in a lot of crazy stuff, so have the Saudis. But Iran, a lot of people in the gold community and alternative media defend Iran. I don't trust them either. I don't trust any government at this point. Thanks for the kind words, Scott. I appreciate it. So I just wanted to give you guys this quick update. If this holds true, and you know, with these crazy stories out, there could be another story tomorrow or the next day that, oh, we were wrong in our estimates. Oil price is going back up. That would only create even more price volatility. It would only create even more whiplash. The average retail investor who doesn't have any volatility hedges, who doesn't trade volatility, is going to get a headache from all this. But if the oil price keeps going lower, it's back to my thesis that there's going to be a continued worsening bear market for shale players. Hopefully some of the shale players hedged at the higher oil price yesterday. Hopefully. Because I don't want to see these shale players go bankrupt. I don't want to see Americans lose their jobs. But with the management teams at a lot of these companies, I'm not optimistic that that happened. On the recent odds, I haven't looked up the recent odds of a Fed rate cut, but I saw a good interview with Richard Fisher, formerly of the Dallas Fed, and he thinks it's very highly probable there will be one rate cut. We'll see. I don't think there will be more than a 25 basis point rate cut. Yeah, I could do another video about that in the next couple days. Oh, we got a listener from Hong Kong. That's cool. Thanks for joining us, Judy. And thank you for my almost 150 Patreon account contributors and my almost half a dozen monthly PayPal contributors. You're making my life a lot easier, allowing me to grow this channel, provide better content, and focus on making quality content. The U.S., I think, still imports some Venezuelan oil, but not nearly as much, because there were reports earlier this year, Ricky, that Venezuela, the production was so low. I think even Robert Rapier, my friend and former coworker, Robert Rapier, who has 30 years experience in the oil industry and is a very well-respected oil analyst and writes multiple paid newsletters about the oil industry. I've interviewed him in the archives of my channel many times over the years. And he was saying earlier this year that there were rumors that Venezuela's oil production had collapsed so much it was below 1 million barrels per day that they couldn't even meet their obligations to the Chinese. Yeah, I mean, in the whole scheme of things, Tarkinas, it doesn't matter. It doesn't matter if there's one rate cut now or no rate cuts. The Fed is still trapped. They can pretend that they're in control. They can't reduce their balance sheet. Their balance sheet's going to increase. It was a question of when and not if. Maybe the Fed should hike to show who is boss. They could collapse the corporate... If they hiked, they could collapse the corporate bond. The problem is the corporate bond market and the junk bond market. I was going to talk about that. There are some more red flags in the corporate bond and junk bond market. I was going to do another video on that sometime this week. The swine fever affects oil price. Depending upon how the soybeans would be for the fertilizers, but I don't think that would be, because you could use natural gas for the fertilizers. I don't think the swine fever and pigs not eating soybeans or not eating feed would have a direct effect on the oil price. Saudi Arabia would also benefit from a U.S.-Iran war, because then the Saudis wouldn't have to fight it. And the Saudis and Iran do not get along either. And it's really weird. I guess it's changed over the last 15 or 20 years, but now the Saudis and Israel are kind of allies on a number of things. It's very weird. Didn't they fight a war like in the 70s? 60s or 70s? Didn't they have some type of skirmishes? I know Israel was involved in a lot of... I'm not familiar with all the exact details of Middle Eastern politics, but wasn't Israel involved in a number of conflicts in the 60s and 70s with the Saudis? So it seems they have some mutual interests. The U.S. does not need another Middle Eastern war. Agreed, Greg. The U.S. doesn't need any more wars, period. Now, I don't get a vote, though. And the military-industrial complex, even though Trump is giving them a lot more money, President Trump is giving them a lot more money in their budget, they might not see things that way. They might not be satisfied with upgrading all their equipment. They might want war profits, too. But Trump has given the military-industrial complex, military-industrial and military-informational complex, military-industrial and information complex, an enormous budget increase so they can upgrade all their tech, all their weapons. I was just seeing new articles about replacing the M16s in the next couple years. And now that they have equipment upgrades, it might be time to get more profits from war. So the military-industrial complex is never fully satisfied, even if Trump is placating them and giving them a lot more pork. Okay, Alexander says the Saudis fought Israel in 1948-1973. Yeah, so that is now they have mutually aligned interests, at least some. So that seems to have changed the view towards Israel and Saudi Arabia. They seem to be aligned on certain things. They both hate Iran. Oh, now there's debate that Saudi was not involved. They contributed financially on the Arab side. They don't teach a lot of this stuff in history majors. I think you have to take a separate class. I don't even remember if my school offered this class for Middle Eastern politics. I don't think it was offered. Yep, Carl says it was initially weeks to fix, then months, then they say only a few days or a couple weeks at most. And plus Saudis have 30 to 45 days of oil reserves, of stored oil, to meet their obligations. But it looks like had the oil production not gotten back online quickly, that the Chinese were going to get screwed. PetroChina was going to get screwed, it sounded like. I was reading articles about that earlier today. Okay, guys. Well, I just wanted to do the short little update. So it wasn't just the Saudi news. It was also that there were surprise crude inventory builds. So let me see if I could find the exact numbers here in the article. Okay, after 4 straight weeks of draws, so crude inventory draws, where the inventory is drawn down, is bullish for oil and bullish for higher oil prices. Crude inventories building is bearish because that shows there's a lot more supply. So there was a surprise inventory build, an increase in inventory of 592,000 barrel build last week, and builds for gasoline and distillates. So it was a combination of factors. Normally in markets, it's not just one factor. Normally it's multiple factors. And then you add in the high frequency trading algorithms, and that's where you get more volatility up, down, or both, either up or down, or both up and down. Because the algorithms are scanning articles that conflict. And there was another really good zero hedge article where on Sunday night in China futures contracts and early futures contracts before the market opened, so I think it was pre-market futures contracts, how the algorithms in a short amount of time were going up, down, up, down, up, down, crazy amounts back and forth, because they were seeing conflicting reports with Trump releasing the Strategic Petroleum Reserve, weighing that on one hand, and then on the other hand, there was the analyst comments that the high-frequency trading algorithm was reading about how it could take months to bring the production back online. So that confused the algorithms, and that's why you got in those short time frame, basically the Richter scale going up, down, up, down, up, down, up, down like a yo-yo. So hopefully we won't get as much whiplash, but unfortunately, guys, I think with the high-frequency trading algorithms, when you have stories like this happen, especially with how the stories have changed with the analyst estimates, and in the Saudi comments conflicting the analyst estimates in only 24 hours, that's when you can get such big moves in the markets. Okay, well, that's it for right now on this oil market update. I'll attach some articles in the information and description section of the video, and we'll see if there's any more oil stories the rest of the week. I suspect there will continue to be more volatility. And if the oil market, like I said, if the oil price stays at these levels or goes lower, this will continue my bearish thesis on U.S. shale oil companies who have higher costs. Hopefully some of them hedged yesterday when the oil price was much higher on the big volume spikes. Hopefully some of those guys locked in a higher oil production for a year or two, so they aren't going to risk bankruptcy and they can help themselves. But if they did not, and oil prices go lower, some of these shale companies, they're not going to be able to raise as much capital as they used to. And like Art Berman said, they're not if you go back and listen to my interview with Art Berman, who is a petroleum geologist for over 30 years, he says that most shale oil companies cannot generate free cash flow at below $60 a barrel, so they're losing money. When WTI is below 60, so they're not even breaking even. And they can't cut production. So in a more rational market, a commodity producer would cut production, but they cannot cut production because they have debt. They either have hedges, so they have to produce into the hedge, hopefully to sell at a higher price, or they have too much debt on their balance sheet already. And if you have too much debt on your balance sheet, you can't cut back production because you need the cash flow. You have to have the revenues. You have to have any cash flow, even if it's not free cash flow. You have to have something to pay back the debt. Otherwise, the bondholders are going to end up owning the company. The management teams normally don't all get fired normally in a lot of these instances anyway. The management teams, but the shareholders, the equity holders, the shareholders are the ones who get screwed the most by far. So that's why when you see the estimates that the shale producers, the U.S. shale oil production is projected to increase no matter what, that's why you see those estimates, because no matter what the oil price is doing, a lot of these shale producers, especially the ones with more debt, cannot cut their oil production. They have to keep producing, and they have to hope the oil prices rise. Because if they cut oil production, they cut the revenues, and then they can't handle their debt load. So those are not companies, not financial advice, just my opinion. Those are companies I do not like to buy those stocks in, especially on the long side. Okay, guys, bye for now. Oh, and thank you very much for the $20 super chat that I saw just came in from What's in a Name. I appreciate it. So everyone have a good night, and I will be on the lookout for more oil stories, and I'm gonna have some interesting content probably the rest of the week as well. Okay, guys, thank you very much.